Hello everybody, let's have a look at Bitcoin, shall we? And we'll have a brief look at the Bitcoin dominance. So first of all, just have an overview of what's going on with Bitcoin. Bitcoin on the 4 hourly is the most relevant time frame to be looking at Bitcoin right now. It's a time frame that has established a downtrend, and it has got pretty good levels of resistance that are being respected on these moving averages. The 10 exponential being the one that we're being rejected from now. Prior to that, it was the center of the Bollinger Band, all the way from back down here, in fact. So it's the one that we really need to be looking at mostly, giving us the biggest clues, I suppose, as to what's going on in the short term, and if we're going to find a bounce at some point. But for the moment, the strength of this downtrend is well, it's getting stronger. Basically, we've got our death cross over here. Now we've got divergences. We've got the moving averages all upside down. This isn't how we want to see them. We want to see this complete opposite of this. We don't want the 200, the 50, the 20, the 10. We don't want them like this. We literally want them the opposite way around. But we don't, and unfortunately, they're going steeper and steeper every 4 hours that goes by, which isn't a good sign. However, uptrends and downtrends don't last forever. Everything will turn around at one point, and so we there are other things that we can look at, to work out, are we going to find a bounce. So one thing that I saw on this is that the MACD is the histogram has had a significant, I suppose, a few ticks up. It's slowed down now, and I would imagine that we do find our way going back down to test maybe even these two zones down here, back down to basically our previous low on this last pass, so for 48,000, but we might find a nice bounce from there, and if we do find a lower low, I think we'll probably get an even better bounce. So if we have a look over here, this is our RSI. RSI is relatively oversold in comparison to where Bitcoin likes to look normally. Obviously, we've come down larger than this in the past, but for a 4 hourly, this is relatively oversold. Now, if you can notice here, we've got a low, and now here we've got a higher low. This is kind of like, it's basically hidden bullish divergence. And if we were to find an even lower low on the price action and a higher low on this RSI, that's a pretty good indicator to suggest that maybe a bounce, even if it's just a bounce, would ensue after that read. So the reason we say that is that, look, we had a big drop down here and a low here, but the price action was here. Now we had a lower price action here, but a higher low over here with the RSI. If this forms again one more time with another lower low, or even an equal low, a double bottom, and a higher low on the RSI, I would expect a decent bounce from there, despite the way that this chart looks in relationship to the Bollinger Band and the moving averages. So that would be my expectation. It doesn't mean that it would happen, but this is how I would interpret this chart right now. So 4 hourly is useful, definitely in the short term, and that's a glimmer of hope, I would say. Now, if we go to the daily, we've just put in a new low here. So this is actually a lower low now. So we've broken structure here for the first time in a long time. So we had higher highs, higher lows until recently. Now we've got a lower low. And I would imagine if we do catch a bounce, whether it's down here or a little bit lower than that, then we will form a higher low. We might be lucky and move all the way to the top of the Bollinger Band, coming up to around 57, maybe even 58,000. But the chances are we'll be rejected around these zones, probably the green 50 exponential, or even worse, maybe the 10, which is around 54 to 55,000. That would be our new higher low. Lower high. Still a little early for me, to be honest with you. I had a rough night with the baby, kept me up, so yeah, I can't actually speak English correctly, so I apologise for that. So yeah, the downtrend is in place still. So let's just face it, that we do have a confirmed downtrend on the 4 hourly and now a confirmed lower low on the daily. So that's not good. That's not good. Now let's think about things on the larger term time frames now. So this is the weekly. So what we have here is actually still very much a bullish setup. So we're okay for the moment. The bulls have still got the larger term time frames, and they're the most important ones to hold on to. They take longer to play out, but they offer the largest moves. So we're still in the bullish portion of this Bollinger Band here, and we will remain here until we come down to test this level here of around about 44,000 more or less. We've also got this white line, this horizontal price action support zone, where we more or less tested here, we dumped down into here, we launched from over here. Now, We've only got a few more days. Well, it's Saturday today, until Monday morning, early Monday morning. This moving averages are going to remain here, but might, to be honest, by the next tick, by Monday, come up to actually this price action. Also, this is this little skinny one. This is the grey 21 exponential. If that moves up to this zone as well, this is going to be quite a strong level of support. And if we did come down here, that would be my preference for a much larger buy the dip opportunity. Obviously, I did buy the dip around about 54,000 while we were still in favour of the bulls on the daily, but that one's failed, unfortunately. So this is why we incrementally buy dips. We don't buy dips all in one go. So my next buying the dip opportunity for me is going to be around here, and that's the reason why. Support from previous price action, also the 20 weekly, which is a hallmark of any bull market. Being above there is bullish. Being below there is actually pretty bearish, to be honest. But it doesn't mean that it's the end of the world. We can be below there temporarily. It's no big deal. So the larger term timeframes are still very much in our favour at the moment. Even if we come down to this level here, which is probably from where we are at right now, maybe about another 10% drop or so. 10-11% drop. So yeah, give or take 10 to 11% further drop for Bitcoin. No big deal, no big deal. I have charted out some other horizontal lines of support and resistance, so where we had rejection, launch. So if we broke down to this level here, this is 38,000, give or take 38,000. That should also offer a relatively decent opportunity to bounce from. And it wouldn't surprise me if we broke down further than the 20 weekly moving average, to really scare the pants out of people, and then bounced from there. That also wouldn't surprise me at all, which is why I would always have some more reserve tether to buy that dip as well. This is what I mean. Buying dips in one go is not the way to do it. Incrementally buying dips is the way to go. And so that would be that. And if that breaks down, obviously things would appear to be very, very nasty. And I would imagine around about 29,000, between 28 to 29,000 would get the rest of my tether. And if that fails, then I'll go and apply to McDonald's, and I'll meet you there, and we can talk about this whole journey that we had and how it was fun over a cheeseburger or a fillet of fish. So yeah, this is the overall grand picture, and again, the bulls still have the grand picture, so don't get too concerned, but be prepared for further downside that could end up down in the high 20,000s over time. But I'm not massively bearish, obviously, you know that, and we are focusing mostly right now on the 4-hourly time frame, and we are going to work out if we're going to bounce from here. There is always that chance. We have the hidden bullish divergence taking place, so we could be okay really quickly. Now, just very briefly, let's have a look at Bitcoin dominance, just for a bit of hopium on the altcoins. Look, we don't need much hopium to see that this chart is clearly still bearish. The peak over here went bearish, and then we broke down significantly from this zone, which we were dancing around for a long time, 60% dominance. We also had a conversion baseline cross beneath the cloud, classic short signal over here, conversion baseline, and that is playing out nicely. We will never catch the bottom, nor will we ever catch the absolute top with an Ichimoku cloud, but we will know if there's likely to be a reversal, or at least a temporary bounce from here. When the Chiku span touches these candle bodies over here, that will be one reason to assume that we're going to go into an uptrend on this chart, or if this cloud starts to glimmer green, which it doesn't look like it's going to do anytime soon. Look, back in 2017, Bitcoin put in its absolute top, right? It put in its all-time high, and after then, altcoins rallied massively. So Bitcoin top, and then altcoins rally. Altcoins actually rallied quite hard for at least a couple of weeks after Bitcoin's top was put in. So I'm not saying that that's going to happen now, but it's worth noting that historically that sort of thing has happened, and price action can decouple from Bitcoin. And we also saw that, in a way, over here in January. Bitcoin dominance put its top in, Bitcoin itself put a top in, and altcoins rallied as Bitcoin downtrended, which is something that I'm just going to show you here, which is quite a an interesting thing to think about when we think about the 20 weekly moving average. All right, we think about this as something that wants to be revisited even in a bull market, and this could have been a lot worse of a time for us to come visit this area, because now it's a lot closer to the price action than it has been previously. We were getting quite concerned over in January, or I was anyway, when we look at the money flow index. This is our top 2017, this is our top 2019, and then we came up to a very high read in 2021. So that could have potentially been the absolute top, and it was looking pretty deadly and dangerous. And when I say absolute top, we have a market cycle. We speak about this a lot. Now, there is a market cycle due to complete towards the end of this year, so I'm not looking for any particular tops, but this could have been the nasty retracement. It had signals and signs that we could have come down to the 20 weekly moving average, which would have been a 60% drop from there. Again, not completely out of character for Bitcoin to do something like that, but we didn't. There was a healthy rotation that took place and a reset of the money flow index. The RSI obviously had its first peak here and then continued with its bearish divergence, which it still has in play. But yeah, it could have been a lot worse. That could have been a 60% retracement down to the 20 weekly moving average. Again, this one could have been pretty nasty too, coming all the way up here. That could have been a particularly nasty top, and that would have been a 53% retracement. But luckily we've decided to, and it would appear that we are wanting to come down to test it now, and from this top down to the 20 weekly, hang on a minute, that's not that bad. That's only a 32% retracement. If we think about this in terms of what's happened recently on this bull market, that was a 32, was it 30? Yeah, it's about 31% retracement, not too bad. This one was also from the top to that wick, a 26% retracement. So having a retracement, within the 30% range, 30-35% range, that's no big deal. In fact, we've seen that recently and we've coped quite well with that. So we shouldn't really be too concerned about that happening again. In fact, we should be grateful that Bitcoin's treating us so fairly, because for those who've been around long enough to understand what Bitcoin trading is really all about, we've seen a lot worse than that, and we've been used to a lot worse than that over longer periods of time. So this isn't anything that concerns me at all, because we've ridden out a lot worse over longer periods. Now, I'm not talking about 2018, where obviously that was the end of the bull market into the bear market. I'm talking about when the bull market began back over here again, accumulation and bull market began. We found a peak very early and spent 6 months in a downtrend. That was particularly nasty. We're not in that situation. And another thing that holds relevance to that is this money flow index, which is still finding its bounce around this zone. Bounce, hopefully bounce. And again, we're not overextended on any of these oscillators over here, and this has offered us a decent bouncy opportunity previously. So pull back here, bounce up here, that was about a 60% move. A bounce and a double tap here, which is something that we might be considering happening over here. A double tap over here, that was into a red zone, and that was about 170% move. Then down to the March crash, bounce, and then the following week we started to move up. This was a very nice move. Again, that was close to about 180% move. And look, final come down here to test this moving average, test this trend line here, which then went on to being a phenomenal rally. So we do have this in our favor also. So there's there is hope there that on the weekly the bulls definitely have a good opportunity for a nice bounce, whether it's here, or maybe even here. But let's look at this in the most hopeful and bullish aspect, which is that all right, we are breaking down. We want to revisit the 20 weekly moving average. That would be nice if it did that. We don't want to break down from there, but I would expect to see at least a bounce from there, and that bounce could end up being a reversal and going on to a new all-time high. If it doesn't, to me, it would lend itself to a slower and more steady consolidation from this top, where we could revisit these areas here. But I don't want anyone to get massively concerned. Like I say, think about it like a game, and keep your kidneys in your body. There's no need to go on the darknet right now and sell those to some dodgy geezer on the on the darknet. Just keep your kidneys to yourself. All right, don't get concerned over these pullbacks like this. the overall picture is very much bullish and time is very much on our side. The big market cycle is due to complete around about the fourth quarter of this year. We spoke about all of this on the live stream yesterday for Patreon users, and if you want to be a Patreon user, and get access to the live streams, we do 2 of them a week, and it's £7.50 a month. So you get 16 hours worth of live streams where we look at all kinds of charts, in a 2-hour period each time. Well, we spoke about it in depth, but the overall picture is that we're not going to be at an absolute market cycle peak here. There's nothing to suggest that we are. We are high in the price action, but we're not overextended with oscillators. We could consolidate maybe for a period of months, worst case scenario, and then find a bottom, whether it's here, or here, and then from there move on to a new all-time high. And when I talk about Bitcoin's all-time high, no one knows where it's going to be. You can't put a price on FOMO. It's just not. It's not possible. It's not possible to put a price on FOMO. But if I had to make a guess, I would expect that Bitcoin does put a new all-time high in this year of $100,000 or more. So that's only 100% move from where we're at right now. Some people might think that that's terrible returns. Bitcoin's supposed to be about making people millionaires, but at this stage in the cycle, at this price of the cycle, the people who have become millionaires were the people who played this game from the very beginning. If you arrive to the party late, you miss a lot of the fun. But there's still plenty of fun to be had, not just with Bitcoin, but with altcoins especially. So you're not late. When you are late to the party, you've missed the game of Twister, but there's still plenty of tequila to be drank. And people aren't going home until the fourth quarter, so don't worry, there's more fun to be had, but for now we just got to wait and see how this downtrend plays, and we'll just keep our eye on it, but also don't take it too seriously, don't get too upset. The bigger picture is still very much in our favor. Even if you do only make 100% return, it's nothing to complain about. 100% return from this zone right now is what I would expect, almost to be in the bank. That's what I would expect. Now, I'm not a financial advisor. This isn't financial advice, but it should be. You should take that to the bank. That, in my opinion, is not a guarantee, but close to it, based upon the overall market cycle and the direction that it's heading, and the way that the market cycle has played out previously, giving us more confidence in the overall market, because the market cycle played out 2 times before, and it's playing out exactly as it should do, due to end towards the end of this year. So don't get concerned, but at the same time, please keep your kidneys to yourself. Anyway, thank you for watching. Hope you have a nice day, good weekend, and take it easy.